Good evening, Jackson.
My how do aha good. So Ken, how was your day?
Good
My day has been good.
evening.
I've been busy in class, so not reading this week actually.
Yeah, sure. I know you are really quite busy down there in Mombasa. I hope you are getting some time to stroll around and enjoy nature.
Actually, no time. It's been quite busy.
Ah, it's all work and work and work.
Yes, yes, yes.
Okay, so I think we do have quite a number of the members on board. Sorry, I was out. I was held up a bit, so I had to come in a bit late. But nevertheless, we are 10 minutes past the hour. Now, I think in our midst, we have a new guy, Marima, who joined us today. Probably we can ask him to introduce himself and tell us more about himself so that we can officially welcome him to the group. Marima, if you can hear me. This guy, Marima, it seems I can't even see his mic. I don't know whether there's a problem on his end, but with connection. But nevertheless, if he will be in a position as we proceed, he will be able to introduce himself. Good. So I'm sure all of us this week, yesterday, and today we have been doing something about what we agreed on Tuesday. We agreed that we are going now to go back to the drawing boards to try again to prepare for the big challenge, the big FTMO. And this time round, we put emphasis on risk management. We ensure that we will work within the 5%, which we will be able to time ourselves, we'll be able to monitor, and we'll be able to register the highest, the peak of your losses in that day. That was that was the closest we can come to that objective of 5%, because as we had noted last time we had our meeting, there were some things which are still not very clear as to how these people they compute, they do compute the 5%. It was really not clear to any one of us when we looked at the literature, when we looked at the videos, really, and also when we looked at the reality, that's the charts that was sent to us when we tried this thing. They seemed not to be really correlating, and therefore we were left in a bit of confusion, which we are trying to clear. So far, I don't know whether coach has anything that he has come up with. I tried to conduct them myself today on the same. And I decided that I am actually going to write, giving them several scenarios so that I can see how they will be able to react to the same. Because I felt that if I call, I may not be able to exhaustively get what I wanted. So I sent them a mail and they have not yet responded. So I'm sure by tomorrow they'll have responded. And that mail I will share with everybody. Once they respond to that mail in the manner that I framed, it will be able to clear. It will be able to clear completely how that matter is handled. So I don't know whether, coach, you managed to get something that would be of relevance to that head.
Thank you, Jackson. From the time we were talking, the last time we talked, I haven't been able to talk to anybody physically. My intent was to talk to somebody like a physical being. So I'm hoping that tomorrow I will do that, because today, like I mentioned earlier, half the time I was on the road. And finally, when I got to Nairobi, I was caught up with a few other things. So I didn't get to actually call them. So I'll call them tomorrow so that we can rehash again. Because to me, that the things they stipulate are yes, I understand their company policy, risk management, and so on, but they look a little, should I say, flimsy? Because, like in our case, in our strategy, the strategy we use uh, takes advantage of what do you call it? We don't always trade in the direction of the market. So we trade in the opposite direction with the hope that then by the time the market actually turns, it will then go with us as we get our profit. Now, that's just one strategy. But from what is that is becoming clear from them, it seems like that would be counterintuitive, be counter their risk management. To them, they don't want us to do that. That is what I'm gathering. And if they don't want us to do that, it means we may have to shift our approach. And I was talking to you earlier, and maybe to the
Yeah.
team, that it looks like maybe, whereas before we could almost take trades arbitrarily, almost anywhere, as long as you're trading counter the trend, because when the trend finally turns around, it will carry you and you take profit. Now, it seems like, from what I'm gathering here, that we have to be very careful of the initial losses because those losses do add up very fast. And because we take many trades, then, for example, hypothetically, if you have, maybe zero point 0.5 lot size, okay, just for example, 0.5 lot size, and you're taking 20 trades, maybe you have a margin that allows you to take 80 trades. So in one setup, you're taking 20 trades. Okay. Hence, each trade is actually about $25 in profit. If you know, if it goes for you, $25. But the converse is true, probably even worse, which means you for each trade that goes against you more than $5, you would be losing uh, more than $25 for each trade, which means if they are 10, so 25 times 10 is already minus 250. If they are 20, that's minus 500. So for that instance, the market moves against you briefly, you already hit their trigger because you've gone to $500. If you have a small account of 10%, then you're not supposed to go minus 500. So right there and there, you're stopped out. And that is probably the case, like in my case. I mean, notwithstanding the fact that the trades did turn around, again, that is our strategy. And I end up being profitable by over $100. So whereas our strategy works, when it comes to FTMO, it seems like we have to pause a little bit and we cannot take trades the way we normally take them. Because right there and then, I'm kicked out not because I have failed, well, not because I have lost. No, it's because in the short run, the margin has gone down below the 5% temporarily. So that is why we are scratching our heads. We are saying there must be another way. There must be a way of skinning this cat. Now, don't get us wrong. It's not like you are not good traders. Not like you haven't succeeded in trading. You have. The only difference now is now we have a challenge that we have to overcome, which is different from failing. So don't look at yourself as a failure. No, you have not failed. Everybody who has attempted this has not failed. We just haven't figured out what FTMO team exactly wants because we can deliver on that. We have delivered before on others. Okay. Now, there is another company in the UK For them, they actually have a lower lot size. Actually, it's very bad. It's 1 to 5. Yeah, we are enjoying 1 to 100 for FTMO. Okay. Now, 1 to 5, this is how bad it is. Even if you run all your margin, I think I tested also. I ran all the margin. Okay. The most you can get is about $80. Like, not at 8, it was $8 if you're doing 0.01. Okay. Oh, and they don't allow you to go beyond 0.05. So it's a bit tricky. It's a double-edged sword, you know. But again, because we haven't given up, because we believe in forex, okay, we just have to put our heads together and figure a solution. So for those of you who have played my crazy sports like rugby, or even football, whenever something goes wrong, people get together, or even basketball. The coach calls the team to the side when a play is not working out, or when they're starting to lose, or something, or there's a serious decision made. So consider this our timeout moments where we have gone to the sidelines and now we are looking at the pitch again. We are saying, okay, fine, how do we counter this? How? We know what they're doing. They are saying that so-called floating loss, once it triggers 5% or 10%, then we are out. So for us, our response has to be something that addresses that. And yes, one of the things we were saying with Jackson is maybe rather than do our trades, the way we've been doing them, maybe we may have to literally wait for the trades to turn. So if we are waiting for buys, we wait for the trade to reach, for the market to reach down and almost start turning, and then wait for a confirmation. I mean, yes, that is not our strategy, but that might be the thing we may have to do. Okay. So that when you are looking for a sell, you don't wait and start, doing the sells when the market is going down. No, you wait until the market has actually gone up and now it's turning before you enter. And even then, we have to be picky in our entries, unlike before. Why? Because that's the only way we can avoid that piled up negative before we take profit. In other words, let's enter the trade when it's going in that same direction versus what we have been doing. So I'll pause there and let's open it for discussion. Let's take it from there and see what guys are saying. Back to you, Jackson. Hello.
Yeah, Coach, I think Jackson seems to be muted. Oh, he's back.
Yeah, I'm back. Sorry for that.
Yeah, Jackson, probably just
thank you so much.
Just pass me back the host. I want to share with the link that Isaac, I think, previously shared, which I think is speaking to what Coach is saying.
Yes.
Are you able to pass for me back the host, Jackson?
Oh, you made me the host, huh? All right, let me pass it back. Sorry, I didn't know that you had passed it on to me. All right. Right, there you are.
I'm sharing this link from FTMO that Isaac had previously shared. And it's this same story that you have been saying. And to me, when I look at this explanation or the literature they have put here, there's something to really highlight here, that this trader probably uses almost a similar, it might be a swing trader, but almost a similar strategy to ours, where you take trades hoping that the market will turn. And I think that's where you get caught with their strategy, with their restrictions. So if you look at this literature, they said that this trader right here, this trader has never crossed the maximum loss on his closed positions, because I think he took trades, but then he was hoping that the market will turn. And ideally, if you look at this graph, and that's what they say here, the market actually eventually turns and the trader actually hits the target profit. But according to their restrictions, this trader fails, because 92% of the time his account, according to the floating losses, not closed losses, because somehow maybe his stop loss was much lower than what he had put. But now when they look at his floating losses, then they say 92% of the time his account was in losses. And cumulatively now they put it as 18,000.
Wow.
You see, so then it means that for them, what they consider as a loss is they look at your closed position, but then they look at also the drawdown on your equity. Any trade that you have that is open, so they keep adding it. So according to you, technically those trades, you have not closed them, they have not gone into losses, because you hope that the market will turn. You see right here in this graph, the market turns and the trade actually hits the profit targets that they wanted. I think these are 2,000, it was a 20,000 euro account, meaning the profit target is 2,000. So technically this trader has reached their target, but this trader fails because of daily loss. So if this trader is using the same strategy, it's not exactly the same, but that thing of, you trade against hoping that the market will turn, then this is what they try to discourage. Yeah. You see right here what they say, that this trader was hoping that the market condition could reverse his losses. So I think to that extent, you're right, coach, that we might have to tweak our strategy, that we only trade in the direction of the market. Because the way our strategy goes is, first of all, you go into losses, and then eventually the market always turns, as we know that it always turns.
Yes.
But then according to that, then it means that you will already be in a disadvantage if they consider the open losses. As long as your trades are not closed, those open trades count to your losses.
Okay.
Yeah, so I'm going to stop sharing my screen and then open it up.
Okay, before you stop sharing, I think this is, let's just firm this up. This is one of the problems we now have identified and confirmed severally, that this indeed is one of the problems, the floating losses, okay, which we can check visually, but more importantly, in our system, we can look at when you start trading, okay, it is that where you look at your profits at the far end, the total, the net, that's what it is. We'll show you on the system. But back to this chart here, Ken, you and maybe and Isaac, can you just find out how they are getting that minus 18,524. Now, let me explain why I'm asking that. Okay. Now, for you and I with a mathematical background, usually we would take the area below the zero line, okay, and down there, that will give us the total loss, okay. But right here, how are they determining the loss? Are they determining it by instances? For example, are the instance slightly above the fourth trade, the lows, are those the ones they're adding up and getting to minus 18,000? Or how are they getting that minus 18,000?
All right. I think from my own deduction, when I look at this curve, if you look here between trade 8 or thereabout, between trade 7 and 16, this person is almost hitting negative 2,000. Not quite that, because this is the maximum daily loss. So somehow is surviving by the skin of his teeth, but it's just above. So if you take on average between here and here, these are about what, 12 trades or something. And then let's say you take on average that in each instance they're counting, like, I don't know whether this is the dip, where it's dipping, yeah? Where it's dipping. So it has dipped up to here. So this is almost it's slightly above 1,000. But if you add all these instances on average, then almost it gives you this total of 18. Because if this line is 2,000, then look at where it's dipping. Dipping. So if you add all the way to trade 16, that is right here, then it just makes sense that cumulatively, because if the average here this is 2,000, then this total of where the thing has dipped all the way to the end could cumulatively add to 18,000. Because technically there's no trade that has gone below the 2,000.
Yeah.
Yes.
Okay. So we have no way of knowing the exact amount other than what they're telling us, or essentially, if we were in a live trade setting, then this would be reflected by the negative running loss on that particular trade.
Yeah, probably the other way to find out, because I tried the free trial, and at the end of the day, they actually gave me this analysis. The only difference is it's on MT4. We will set up free trials on their own platform on MT4, and then now get this, because now you'll be able to monitor and also be getting these charts that they give us, and maybe it will give us a better understanding. Because on the trial, I only traded for 2 days. On the trial, you need to trade for 14 days. I only traded for 2 days, and at the end, they gave me the verdict that I had not passed, because first I didn't even trade for 14 days. But it almost gives you the similar analysis to when you're taking the challenge. So probably when we take the free trial on MT4, I know most of us don't like MT4, it might answer some of these questions, especially this floating loss. So we can deliberately lose, not hit the target, but see, and then maybe we can use that to explain some of these things we are facing.
Okay, and that's fine. Remember, we are still exploring. We're trying to find a solution to a problem, and it's okay. It's okay to test. It's okay to try things that we think can be of help. I think I did that one also. I attempted that one. Like you, maybe I didn't have time to continue with it, but I did see there was. I think I left some trade or something. But the analysis did not explicitly say whether that was a cumulative loss or it was a dip to show the loss. That's what I'm trying to say. It was not, they didn't specify, they didn't say. And it'd be good to find out. Or the other option is to find out, just to do like a random test using our trades, because now we know if we take trades and we look at the running net profit or loss and maybe freeze an instance where maybe it is losing and see the area under our trade line, okay, where we enter the trade, if that will correspond. If it does correspond, essentially, we're just trying to prove a fact. And if we can prove the fact that actually that indeed corresponds to that, then becomes easy. In terms of managing the trade, at least now we know one thing for sure. Yeah. But anyway, sorry, I didn't mean to interrupt. Just go ahead.
All right. So I think, like you are saying, that at this exploratory stage, it's almost like we are gathering data. So as the more the data we gather, the better. Mm-hmm. And of course, we also keep asking them questions. But I think the key to overcoming this challenge is to understanding this floating loss. Once you understand this, I think we will be good. And I think we're already getting to the basics. That is, one, do not do counter trade. If you do counter trade, of course, you're already getting into a lot of the floating losses. And they have already clearly said that according to them, losses means closed positions plus any open trades. So that might put you into a disadvantage if you're doing counter trading. So maybe tweaking our trades a little bit, trading only in the direction that the market is going. I want to mention that we have about 3 minutes to the end of this. So I don't know if we log into a new session or we allow people to ask, we go into open plenary.
Yeah, I think we should we can log into a new session so that now we can give an opportunity to people to say one thing or the other.
All right, so for the new session, just click on the same link. It's a recurring meeting. So I'm going to stop this so that we just go into another new session.